Hi, and welcome back to another YouTube video. I have a really interesting video prepared about how I built a 7-figure investment portfolio by age 21. What's up everyone, it's Camden here, and today I'm living out a topic a lot of you asked about. How does a 21-year-old millionaire entrepreneur actually manage his wealth? Now, before we kind of get into numbers, strategy, or stocks, this really isn't about bragging. It's about showing you what's possible. When you combine ambition, you start investing, and you have self-discipline. I'll share how I work with Fidelity Investments, how my wealth advisor and his team manage a portfolio. The portfolio is a US large cap strategy, and the exact mindset that helped me go from a kid with a dream to a founder of multiple successful software companies and a large investment portfolio. So let's rewind for a second here. I didn't grow up as a trust fund kid. My story is one of learning, failing, building, and dreaming. Dreaming big. I started my first company when I was a teenager, driven by my love for technology and a curiosity about how the world works and my place in it. Over the years, I've founded several ventures in AI, software, and the digital innovation space. Each one designed to solve real-world problems using technology. I've been through fundraising, product launches, sleepless nights, and that beautiful chaos that every founder knows too well. When I reached a point where I started generating significant revenue, crossing the 7-figure mark, I knew it was time to manage money the right way. Why Fidelity? I chose Fidelity Investments for one main reason, and that reason is it was backed by history. Fidelity was founded in 1946 in Boston by Edward C. Johnson II. What started as a small mutual fund company, evolved into one of the world's most respected investment firms, managing over $4 trillion in assets today. They've really pioneered the online trading space in 1990, and they continue to lead in fintech innovation today. Beyond these big numbers, what stood out for me was their personalized wealth management approach. My wealth advisor at Fidelity, he really helps design, a US large cap investment strategy for myself, meaning that, the money that I'm investing is diversified across, some of America's most powerful companies. Think Microsoft, ExxonMobil, Wells Fargo, General Electric, Nvidia, Meta, Apple, Boeing, and Bank of America, to name a few. These aren't just stocks. They're, pillars of American innovation. Together, they form part of the S&P 500, which, historically returns around 10 to 15% annually over a 5-year period. How do I manage my portfolio? That's a question a lot of you may ask, and this is kind of the meat of the video today. Here's how it works. With Fidelity, I have a professionally managed account, but I stay actively involved. I review quarterly reports, rebalance allocations when needed, and I always, am learning from my advisor who has, 3 decades of experience in wealth management. My portfolio includes about 200 large cap common stocks, and my focus is on long-term compounding. Let's talk about that word compounding for a second. Albert Einstein once called it the 8th wonder of the world. When your money earns returns, and those returns, start earning their own returns, that's how real wealth is built. So if you start early, like myself, even small amounts can turn into something bigger. For example, investing $500 a month at a 10% annual return can grow to $1 million in under 30 years. And that's without owning a company or making 6 figures. As Warren Buffett says, time is a friend of the wonderful company, the enemy of the mediocre, So leveraging time, you can basically create success. Let's talk about some wealth building habits. So let's, shift gears for a second here, because building wealth isn't just about investing. It's about mindset, routines, and emotional control. A few personal principles that, I've cultivated over my early career are, before spending, you want to kind of, pay yourself. You want to automate transfers into your investment account so wealth grows silently. You want to invest in skills that multiply, right? So, creating high income skills, those skills are going to be the foundation for your success, because if something happens, you can rely on those skills to kind of accrue money. You're going to want to stay consistent, stay consistent. Don't time the market. You're going to diversify, right? Ray Dalio says you want a portfolio. And what this means is you don't want to put all of your eggs in one basket, because it's very risky, especially in business and investing. So diversify, buy more than just one stock. And always remember, wealth isn't really measured by money. It's measured in freedom, peace, and purpose. There are some people, what this means is there's some people that have a lot of money, but they're miserable, right? They, don't have good relationships. They, kind of lost their purpose. So money is money, but wealth is abundance, right? It's abundance. How can you get started? A lot of you that are watching this video may ask, how can I get started? You can open up an investment account. If you're a certain age, 18, you can open up your own account. Otherwise, you're going to want a parent, to manage the account. But you can open this account up with Fidelity, Vanguard, Charles Schwab. There are, so many good options here. I'd recommend starting with index funds or ETFs, right, that track the S&P 500. You're going to want to automate contributions. Even, $100 a month matters. And then you're going to learn while you earn, right? So this is a big one, right? I've read a lot of books about finance during my early career, right? And these books are super helpful in terms of your personal development. The Intelligent Investor by Benjamin Graham was one of my favorites. I also really loved Rich Dad, Poor Dad by Robert Kiyosaki. I recommend getting a mentor or advisor who knows the game, right? Because you're going to want to lean on them and their guidance if you have questions, or, maybe you fail your first time, and, leaning on a mentor is going to kind of help reduce some pitfalls and frustration along the way. One thing I recommend as well is, right, don't wait for the perfect moment, right? The best time to start investing was yesterday, and the second best time is right now. So let's talk here about a little bit of motivation and legacy. At 21, guys, I'm just getting started. My goal isn't just to grow my portfolio, it's to inspire others to think bigger. Money should be a tool for impact, not validation. I want to show young founders that you can be financially smart, socially conscious, and wildly ambitious, all at once. Every time I check my Fidelity account or meet with my advisor, I think about my parents, how proud they are to see their son not just chasing success, but managing it with purpose. And that's what wealth truly is: the ability to create, give back, and design your own future. So if you're watching this and wondering how to start your wealth journey, start with discipline, curiosity, and unwavering belief in yourself. If a 21-year-old like myself can do it, so can you. Make sure to hit that like button, subscribe, and drop a comment with the biggest wealth goal for the next 5 years. I want to see you win big. Let's build this generation's new class of financially independent creators. Thanks for watching, and I'll see you in the next one. Peace.